You got people here that are high up that are making policies or have been involved in making policies, all saying the same thing, that we need to basically inject some, as Zoltan put it, a Volcker moment into the equation. We need to shock and awe. We need to drive down the asset prices to, I think, make people start to rein in their spending and to wake people up. And the question is, can they do this? It's never been done before, where they are able to kind of ride the rails. And I think it's what we're looking at is a much higher probability, done again, of market volatility heading into the spring. Yeah, you had James Bullard come out a few weeks ago talking about an aggressive quantitative tightening idea that he had, where he thought that the Fed not only should accelerate the pace in which they stop asset purchases, but actually accelerate the pace that they've done before in terms of unwinding, selling off their balance sheet, that he was calling for a 50 basis point rate hike and even intra-meeting rate hikes. And, there were a lot of people that came in to do damage control and poo-poo what he was saying. But today, he came out and reiterated, and he's calling for strong action from the Fed against stubborn inflation, and more or less saying that they're missing their inflation target, and that this is all happening while they're still making asset purchases. And this is very concerning, actually, in that we're seeing other articles talk about the economy is already beginning to slow down. And so when you see reiteration from one of the main Fed economists, Fed governors, saying, hey, we need to really step this up. We need to accelerate the pace at which we're doing it. We need to announce a 50 basis point reduction immediately. We're seeing a shift to less accommodation. And, when you realize that the economy is all starting to show signs of slowing down in new housing applications and new car purchases, because things are getting expensive, discretionary spending is not as important when the everyday staples are getting expensive. The scary part about all this is to see calls for less accommodation, a more swift and expedient unwinding of the balance sheet, and a more aggressive approach to raising rates in the face of a slowing economy. At the same time, we have Zoltan Polzar, who came out today and talked about something very similar. He's basically saying what we've been talking about for a long time. This is the gentleman who is known for his writings and information on the repo market. He was once a member of the New York Fed, I believe. And what he's talking about is, look, the only way that this is going to resolve itself is to, without blowing up the entire system, is to create volatility in the stock market, because he points to the fact that we have record high inflation, price inflation, along with record low labor participation, that people are feeling wealthy with all of their asset prices at all-time highs, whether it be younger generations with Bitcoin or retirees, nearing retirees, with 401ks and house prices at all-time highs. The incentive to get into the labor force is low, prices are high, and there's less stuff being made because there's fewer people making it. Basically what he is saying is that the only way that you can incentivize people back into the market, the only way that you can slow down the pace of inflation, price inflation, is to shock the market, and to shock it by watching the rates rise enough to drive down the equity prices. And the question is, when that happens, where do they go? But you got people here that are high up that are making policies or have been involved in making policies, all saying the same thing, that we need to basically inject some, as Zoltan put it, a Volcker moment into the equation. We need to shock and awe. We need to drive down the asset prices to, I think, make people start to rein in their spending and to wake people up. And the question is, can they do this? It's never been done before, where they are able to kind of ride the rails. And I think it's what we're looking at is a much higher probability, done again, of market volatility heading into the spring. And I think the Fed realizes that they're going to have that moment where the markets fall to reach an equilibrium. And we're a long ways away from that, of course. But when you see guys like this come out publicly, and Bullard, after being poo-pooed and damage controlled, come out and reiterate, and Pulsar come out and say, hey, the only way that this happens is to bring asset prices down, to shock people into not spending as much, not taking on so much risk with record high margin debt, reining it in a little bit, bringing down wage inflation. I think it's starting to get real. It really, truly is starting to get real. And we keep talking about what does the Fed do? These are, I think, the plans that they're going to take. They're going to try to ride the rails, shake the heck out of the markets, and not crater everything to try to shock things back into a new normal. I don't know. I find it very concerning because, quite frankly, I don't see how they do this without reversing course and piling more money into accommodating, into lowering rates, and into a inflationary policy that we've been on. They're talking about, in fact, the head economist, the Bank of America, is talking about, because of this, when we see the Fed is still at zero rates and buying bonds, and we see things slowing down, that when they do this, we will see a recession as soon as the second half of 2022. That's when they all start implementing, by March or April, this policy. And what does it mean for the rest of the year? It's starting to get real. It really is starting to get real. Yeah, it just goes to show how long it takes to get these coins in, and at a halfway decent price. I think we've gotten a line on something that will fit the bill. About 8 weeks ago, we purchased 2022 Australian kangaroos. They have cleared customs today, which will put it a day too late to get on our next truck, which will be at our warehouse on Monday. Brand new 2022 Australian kangaroos. And this is what I've been getting at all along. Now, normally, we're able to have them in our warehouse in a day or two without a second thought. We're looking at 10 weeks from the time we ordered it to the time they get into our warehouse. And we've been dealing with logistics and logistics problems literally all year long, and seem to be getting worse. We had a discussion offline yesterday about this. And the only final thoughts really that I have is that this is all starting to unwind. It's starting to get real. And we can ponder about what moves the Fed's going to make or isn't going to make. The point of it is that they have to do something. And when you see heads of Fed branches coming out and saying this is what we need to do, we need to double down on our efforts to unwind this massive bubble, the greatest bubble in financial assets ever seen, it's getting real. And I think people need to be prepared and get ahead of this and start to mitigate your exposure. Take some profit off the table and put it into what is probably the most undervalued asset on the planet. Take profit from areas of equities and cryptocurrencies that are at all-time highs and move it into something that is half of its all-time high and poised for what may be a generational move. Certainly, I'll say this, the last thought that I have is that the demand and the amount of silver that is being sold is not reflective of the price, not even a little bit. And so this is, I think, getting close to the 12th hour, at least in terms of seeing how it all plays out. And if things go the way that Bullard is talking about, or Pulsar is talking about, or even Fed Chairman Powell, if they really do start to get tough on inflation, which a lot of us don't think they will, but if they do, and if this may be the beginning of the reset or the beginning of something that is going to shake the markets enough to allow the Fed a little bit of wiggle room, it's getting close to that moment. And, they talk about March, but you don't want to wait until March. You want to get prepared now. And this is the best thing we've had to offer in a long time.